This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now for a discussion on the market trade as we work through the month of October, we are joined by our good friend Chad Hart with Iowa State University here today. Chad, great to catch up with you again, sir. How are you?
I'm doing well. How are you, Jesse?
I am doing great. Thanks for joining us here today, Chad. Always enjoy getting a chance to sit down and talk with you and talk about these markets. And, it feels like the last couple of weeks, there's been a lot of news items impacting the trade, but broadly, it feels like there's not a whole lot of fresh news as of late, per se, at least the last couple of days of trading. But, just looking at this market, 1,000-foot view to start. We're going through harvest, got some of that seasonal typical harvest pressure, but a lot of, maybe I would say, conflicting news items in the trade that's kind of just kept us range bound, Chad.
It has kept us range bound, and luckily it's a pretty good range. I went back and was looking at where prices were last year at this time versus where we're at now. And so, for example, here in Iowa, the idea is both corn and soybeans are up over $1.50 compared to last year. So if you're going to be range bound at this higher level is a good place to be. But yeah, you're right. The idea is as we look at the news stories, we can point to ones if you want to be bearish, we can point to some if you want to be bullish. And the issue has been that those have basically been offsetting each other for the past couple of months.
Very true. And I think about as well, $7 corn, $14 beans. I mentioned this a couple times this week. That feels like this psychological overhead resistance in both of these markets, Chad, that we can't seem to break through yet. As we alluded to, we're not really falling out of bed per se here either. Although some of the trading days, some of the, path of least resistance has been to the downside.
It has been, and I think that's because of the concern of, okay, we've been able to maintain this for a while, but how long can our consumers maintain this? And I think that's one of the concerns as we're looking forward here is that USDA has been bringing down those usage categories, especially on the international side. And I think that's the, if you will, the shoe that everybody's waiting to see if it drops or not. Because if that starts to significantly pull back, then we will settle back into some lower prices in the future.
Yeah, and we think about that consumer demand and we look at, the price of food and fuel and fiber and everything at the grocery store and, the talks of inflation. I know that's still a huge topic in this broader market sector, Chad. And as you look at the economy and you look at the thoughts of recession and a little more on just that consumer demand, I mean, one has to wonder what things could look like December, January, February. I think there's still some unknown out there.
There definitely is, but it is it's again one of these deals of conflicting news stories here as we look. We know inflation's out there. Everybody's, we're feeling the prices, complaining about the prices. And let's face it, we know our lower income consumers have had to make some significant changes to what they're purchasing. But when I look at, let's call it the average consumer here in the US, what I see is them continuing to consume just as they have, just doing it at a higher price. And so that says that we've been able to maintain these higher prices and the consumer has gone along with us. But it's a question of, again, how long can they keep that up and how long are they willing to keep that up? I think here with domestic demand, it's more a question of will they decide to. I think on the international side, it's how long can they do it?
Well, and I know that it's on the international side, to your point, really affecting our exports. Exports have just been pretty dismal. Beans have been okay. I got a feeling this week's soybean export sales number will be pretty good with all the China sales at the end of last week. But beyond that, corn's pretty sluggish, wheat's pretty sluggish. What are your thoughts on exports? And I know there's other issues tied to that too, including the river situation, Chad.
Yep, we've got, when you're looking at the international side of the equation, I'd say there are a lot of challenges here. And as you mentioned, the idea is while soybeans looks decent, it's still down from a couple of years ago. Corn has been really flat coming out of the gate, and we're not seeing a lot of pickup there. Wheat has struggled as well, and it's because when we look at the global supply and demand situation, we were worried about wheat going into this year because of the Ukrainian war, but things have seemingly settled out there in terms of global production is relatively stable compared to last year. Corn, we're down some, but that usage is down, and it's because we've seen some, let's call it demand erosion because of the higher
Mhm.
prices that we've experienced here. And then you throw on top of all that the problems of getting crop out of the U.S. right now with our river system, which is causing, I would call it, phrase it this way, slightly lower prices here in the interior of the country, but higher prices as we look at our exportable quantities out there. And so that as well is impacting our ability to not only reach the markets, but reach them at an effective price.
Well, I know as well, more on the river issue in a second, but I know South American crops. What is the number I saw here this morning? 16% discount for corn buyers for Brazilian corn for November versus the US. So, I mean, right there, you're seeing China and others going to Brazil to get corn right now because of pretty hefty discount.
Oh yeah, I mean that's the deal. We have seen both Brazil and Argentina be very aggressive in their pricing over the past couple of months, both in terms of just the price that they set, but also let's face it, that the dollar has been working against us as well.
Mhm.
That has given South America a pricing advantage, and our global consumers are taking advantage of those opportunities.
Well, talking the river situation, Chad, what are your thoughts on this and maybe not only the short but intermediate long-term outlook here because the weather models we're not looking at any significant rain or snow to help out the river levels on the Mississippi here in the near future. So one has to wonder what this situation is going to look like here through the rest of the year into next year, Chad.
We definitely, I mean, this is something that I think we've got to worry about over the intermediate term here. As you mentioned, this is not going to be solved with one storm system moving through. In fact, the idea is it's going to take, let's call it consistent rains and some snow over the winter time to try to recharge those rivers. And it's not just the Mississippi. We're seeing problems in the Ohio and the Missouri as well. And when you think about the just amount of grain that moves down those rivers, but also the amount of ag inputs that move up those rivers. It is creating problems in terms of our pricing as far as our marketing of our crops, but it's also impacting the cost structure we're facing as we're going into the 2023 growing season. And so it's going to have, let's call it a twofold bad impact for agriculture. Lowering our crop prices here because we can't get the crop out as fast as we would like to over the winter season. And it's also going to raise the cost of producing that next crop as we go down the line. So I think that's the double barrel challenge here. And it's something that we know can't disappear quickly.
So if I'm a farmer, how do I navigate this volatility right now, Chad? Because I think you hit two key points there. It's tough for marketing the crop that's on the combine right now, but then looking at next year, can we get certain fertilizers up the river? That's going to be a big question on top of a host of other issues, Chad. So looking at this from the farmer perspective, what do I do?
Well, I think on the crop side, one of the things I know a lot of farmers had already been preparing to do was, they're looking to store that crop, hold on to it until say late next spring, early next summer, and look for those opportunities then, with the hopes that the river system would be more fully operational. I think if you do have to move crop earlier, the idea is we want to do it in such a way that we could set ourselves up to possibly gain if prices do continue, to rally as we look out there. And so looking at things like if I have to sell, do I sell with a call option on top to give myself some latitude to extend that pricing season for myself? And on the input side, I think it's, let's call it, it's homework time. it's time to evaluate, okay, as I look at my fertilizer choices, what's coming in by barge, what's coming in by rail? Do I have some opportunities maybe to shift the way I'm getting the nitrogen to my ground, or where I'm sourcing this in order to alleviate some of those supply chain issues?
Well, Chad Hart with Iowa State University is our guest here today on Market Talk. Chad, a little more on the cash side of the equation for farmers too. You mentioned this, farmers that might have to sell. Maybe they don't have enough storage to store. Maybe they're selling right off the combine right now. Some of the pricing in the interior holding up okay on the basis side. Yet, the river we have our challenges there, high barge rates, etc. But if I'm a farmer and I have to take some grain right to town. Feels like there's some decent opportunity there, but also, as you alluded to, some opportunities for reownership.
There are, and go back to a comment I made earlier. When we look at our cash pricing right now versus where we were at last year, we're definitely well above the levels historically, if you want to look at it that way. So we do have some good, strong prices out there if we do have to make a move right now. But I think a lot of producers are looking at these smaller crops coming out of the fields and seeing the potential for better prices down the road. So, it's more a matter of how do I set myself up to take advantage of that, even if I do have to move the physical crop here today. And so that's where you sit down with your grain merchandiser or your broker and you say, okay, what are my mechanisms that I can utilize here? What sort of minimum price or forward pricing contracts, or can I look at options to try to give myself a longer window of time to capture those prices if they do improve without costing myself a lot of money today?
The wheat guys and gals, a little bit of a different story there. We obviously have the Russia Ukraine situation. We'll talk more on that in a second. But, we have dryness concerns here in the U.S. Winter wheat planting over 60%, but emergence 39%. And there's a lot of talk that emergence in the plains is really starting to be an issue that folks are watching, Chad. What are your thoughts on that and your thoughts on this wheat market in general right now?
Well, that's the deal. When I look at this wheat market, and you could sort of see it in USDA's numbers as they were looking forward as well, we are concerned because, we're going in here now to this would be the fourth year of a wheat crop that's been impacted by somewhat significant drought, either to finish the crop or to start it off. And so, you think about the dryness that we've seen. We just talked about the river systems being dry. That means that the soils throughout the Midwest are also incredibly dry, and it's hard to get a wheat crop started unless you have a little moisture there to work with. And so we have seen wheat prices improve a bit here. USDA actually raised their season average price estimate up 20 cents in this last report because of the weaker crop we pulled out this year and the, let's call it, weaker prospects as we're looking forward into 2023. And that's not only impacting the wheat crop, but that's also feeding back on the livestock industry as well. Because when you think about that wheat that grows out there during the winter, some of that is utilized for backgrounding cattle. Well, we're looking at a smaller cattle holder because of the drought as
Mhm.
well. And so it's creating, I would call it, an outlook for higher wheat prices, higher feed costs, but coming at the cost of less production.
I want to get to livestock, but Russia, Ukraine, still a wild card, still one of the big headline drivers. I know that there is rumored chatter that Russia could still extend the Ukrainian grain deal, although that's a lot of skepticism. I'm no, foreign political analyst myself, but just looking 1,000-foot view at this situation and where it stands, just doesn't feel like it's getting better anytime soon, Chad.
It's probably not getting better, but it may not be getting worse either. And I think that's, again, and one of those challenges here. When we look at the actual flow of grain that's been coming out of the Black Sea region, it's about half of what it usually is. So it's better than what we thought of at the beginning of the war, but it's still not back up to a full flow there. And yeah, depending upon what day of the week it is, it seems like every other day, Russia is either saying, hey, we're talking to the UN and through them to Ukraine about extending the deal. The next day, they're saying, nope, we're going to rip the deal up. there's no consistency there, but at least there's also been no action. I'll put it
Mhm.
that way. And so I think the global markets are sort of handling this as okay, we'll swing back and forth a bit based upon what is the flavor of the news today, but they're still expecting, I would say, roughly half of that normal crop to be coming out of the Black Sea region as well.
Well, another thing that I think the global markets have largely just had to maybe forget a little bit is because there's a lot of wheat out there, but it's in Russia, Chad.
Yep, it is. And, this goes back to, when you think about Russia and the sanctions that are on them, and you're sitting there going, well, where can they market that wheat? Well, you got to remember a lot of the world is not imposing those sanctions on Russia. That's basically the US, Europe, Japan. But when you look at places like China and India, and you think down in North Africa and the Middle East, those are still open markets for Russia to reach, and they have been working on, let's call it, finding alternative shipping routes to get there. Just like we're going to have to do that sort of with the river system suffering so low, Russia has been doing the same thing to steer around the sanctions and the war going on in the Black Sea.
I want to leave time for the livestock discussion. You touched on that a little bit ago as well, just the higher feed costs and more playing in, and a smaller cattle herd. We have a cattle on feed report Friday, and it sounds like that this report may finally be the one that shows that shrinking cattle herd and gives us some bullish momentum. What are your thoughts looking ahead to that cattle on feed report Friday, and just your overall thoughts with cattle and this market right now, Chad?
Oh yeah, I mean, I think when you look at especially the past week or so, the cattle market has been showing that, yep, this is the report that they expect to see those numbers really pop out, and I gotta agree with that. I mean, the idea is this is a report that no, we've known this one's coming.
Hmm.
We knew that, in this case, the drought has been having a significant impact. We have pushed a lot of cattle forward into the market. And so we saw, let's call it generous supplies here, late half of 2021, especially, the first two-thirds here of 2022. We've had a lot of beef to work with because those animals came to the market early. Now, as we look at the winter here coming up, we think we're going to see, and that's what the trade is betting on here, that those smaller numbers are going to come in. We're going to see that this herd is going to shrink, that beef production in 2023 is going to shrink, and that means higher beef prices throughout.
Well, and thinking as well about this cattle market and the feed concerns, I've been hearing a lot of stories of, a lot of guys in the plains feedlot country trying to truck it in, bring it in by rail, but trying to bring corn from the east to the west, which is not typical movement. And I think that's something that bears watching as well as we go through the next couple of months and get into winter time, Chad.
It definitely is, but I would argue we've sort of seen that pattern for I would argue last couple of years. For
Okay.
example, when I'm looking at basis levels here in the state of Iowa, traditionally, I used to joke that Iowa was like that pool table that would sit at the local bar where everything sloped to one corner. And in this case, the corner used to be the southeast corner of Iowa because we were looking at the export markets.
Hmm.
You look at basis patterns over the past couple of years here, we've been sloping to the northwest. That tells you, yeah, we've been trying to pull corn back towards the west. Not only are we doing it this year, but we were doing it last year. And so this has been something that has continued to build over time. And as you say, it's hard to do, and it's getting even harder as these crops get smaller.
Interesting thoughts there. Interesting thoughts on the Hogs side, Chad. Hogs finally maybe finding some support here this week. Kind of been on a roll. I wondered if December front month would come up to the cash index. It looks like that is trying to happen. We're trying to fill some chart gaps, but you look at this hog market here, fourth quarter, heading into the doldrums of winter. What are your thoughts?
Well, that's the deal. As you say, I mean, hog sort of is riding on the coattails of beef on the way back up. But where beef is getting to sort of newer highs, hogs is just getting back to where it was about what, 2 months ago. And
Hmm.
so I think that's the deal here is we're getting back to a market that everybody's sort of comfortable with the hog industry. We're looking at a little growth, but not substantial growth. In fact, USDA cut that number when you think about the WASD report this past week. They said, we do see a little growth there, not as much as we first anticipated a few months ago, and that's helped buoy prices within the industry.
Well, Chad, great thoughts as always. Before we run out of time, the floor is yours. Any final thoughts? Anything else you want to reiterate for us here today?
Well, I guess the thing that I'll finish off with is something we've talked about here as throughout. As we're looking at agricultural prices sort of across the board, we're actually in a pretty good spot right now as we run through harvest where we're still seeing fairly good cash prices out there. They're not quite as robust as they were throughout the summer, but given that we're in the middle of harvest, we're in a good spot here. And we're seeing opportunities for continued price growth as we look out there, but it really depends upon global consumers continuing to sort of ride along with us as we go through these markets.
Well, it's something to keep in mind. We'll keep our eyes on it, and we appreciate the time and insight as always with that. Chad Hart, economist with Iowa State University. Thank you, sir. Have a great one. We'll talk to you again soon.
Thank you.
And that's going to do it for Market Talk here today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great rest of your day.